In this video, we will discuss the behind the scenes of how 401k plans work, including what employers are paying and receiving, what fees third parties are taking from your plan. Oh yeah, why transparency matters when managing your retirement savings. There are more people involved with your 401k plan than you might know about. So
it's a crowded party.
It could be. All right. So who's involved in a 401k plan? We have the employer, who's also the plan sponsor, and usually the capital P, capital A plan administrator. Okay, the people really responsible for that. You have somebody acting as record keeper. Somebody needs to keep track of the money.
Well, that's where the money is. They're keeping track of it, and it's
record keepers and custodians. It's a shared functionality. They're keeping track of the investments by employee, by contribution source, and then by investment. All right. Then you have us. We're the third-party administrators, little p, little a. Okay. We are your friendly neighborhood compliance geeks. Okay. And even if you're in a bundled environment, somebody is performing this function. We hope. All right. Okay. Then you have your financial professionals. All right. Well, because at the record keeper, there are your mutual fund families usually, and your stable value fund providers and your money market providers and those. Then also we've got somebody, a new tier or a new vendor that is making their appearance known in more and more plans each year. That's a 321 and a 338 provider. Those are different types of investment filters. We're just going to leave it at that. Okay, we can do another video on that some other day. Now, of course, we've got payroll companies are becoming more and more important in having a successful and healthy 401k plan, especially since the new ones all have automatic enrollment with automatic escalation included. And of course, there's our good old friends, the compliance regulators, because it's not a party until the IRS or DOL shows up. Yes, Mrs. Dipper.
So there's at least 8 seats in this car.
Oh yeah, it's a big old minivan.
Yep.
And we might have somebody strapped up on top, and sometimes that feels like us. Okay. So anyways, so now then we've got, so those are not everybody understands or realizes how many people are involved inside or managing a 401k plan. Now then, so the next area is how the plan is managed, okay? Now, an employer is going to select a provider.
Yes.
Right. However, the administration of, even though they may select a provider, a lot of the work is then further outsourced. As an example, many plan sponsors pick the financial professional, and most of the time, because this is the biggest number, that financial professional works for a specific broker-dealer. That broker-dealer is most likely going to limit the record keepers that they can deal with. Those record keepers have then each filtered down the number of available funds. True, you might have 8 record keepers that broker dealer lets you work with, and each record keeper might have 600 different funds on the platform, but we've got some filtering going on behind the scenes. Now then, so that's just on the provider side. Now then, you still have things that require a little ongoing maintenance. It's a little weeding and gardening, right? A little watering and hoeing, okay?
Right.
So we've got compliance needs to be taken care of on an annual basis. Contributions need to be taken care of how frequently, Mrs. Tipper?
Per payroll within
X
short
time of days.
Short time frame.
All right. We've got contributions going in per pay period. There's often a lot of employer money going in a lump sum after the end of the plan year. You've got distributions. We've got our good old friends required
and
minimum
loans.
Distributions, loans, quadros, in-service distributions, hardships. There's usually a lot of transactions in even a basic simple plan. Money going in, money going out. Vesting needs to be paid attention to. We need somebody, usually us, somebody needs to make sure that the right funds have gone from the right person into the right account, into the right source. Most TPAs like us do not verify that the correct investments are picked. Okay, that's usually between the participant and the record keeper.
The role of a third-party administrator. Ta-da! Here
Your
you
friendly-
are.
That's us, your friendly
What do you
neighbor
do,
complaining.
Christopher? What
All
do
right,
you do?
so what we do
what do
versus
people-
what employers might assume that we do. All
You
right.
drink bourbon and make silly videos.
No, we are in a very, very small club of that, dear. There's not a lot of. Let me know who the other TPAs are who are doing this. So, I do think a lot of plan sponsors who are not paying attention and are not our clients think that TPAs simply download a file from the record keeper, convert that into a 5500, job's done. It's an easy button, right? Yeah, no. Okay. There's generally
We wish.
we wish I'd be driving a different group of cars. All right.
You'd have more hair.
We'd have more. Yeah, and it'd be a different color. True. Okay. So TPAs end up doing a lot more stuff than that. There's helping the plan sponsor to figure out what's going on with rehires. Okay. There's helping the plan sponsor figure out when somebody is eligible, who should be subject to automatic enrollment, who should be subject to automatic escalation, who the long-term
and
part-time employees are, what the minimum required contributions are, what the maximum allowable contributions are. Now that.
So there are common compliance mistakes that can
Unfortunately.
cost businesses money.
Yeah,
And so this
exactly.
is the other reason
Why
really having a good TPA is
we can
important,
really
because we
help
can
you with this
really
one. Yep.
help
Okay.
minimize the damage.
So in no particular order, just off the top of our head, delaying or late deposits for the employee deferrals. And of course, if you're making an employer contribution and you do it after it was deductible, yeah, sorry. Okay. A late 5500 can be really, really expensive. Okay, I think that the penalty is like $2,500 a day or something now if they come after you and it's really late. All right, it's very simple to fix, to do it on time, but very expensive if you get caught for having a late 5500. Late document restatements.
Yep.
Okay, those are every 6 years. Not handing out the mandatory notices to participants. Those can be a hefty fine. Not including everyone. Catherine, what does everyone mean?
Everyone.
Filippo, what does everyone mean?
All people that you've
is that the same
employed.
as all?
All.
Okay, so if you have 98 W-2s, should we have 98 people on the census? Yes, okay, yes. So, no, and this might seem like we're being silly here, but no, okay? We're always asking for all employees, and we rarely get all employees, okay? It's very important.
But it's very timely now.
And it's very timely now, long-term part-time employees, okay? And then also, finally, can be a result of not including everyone on a census request, enrolling someone late, especially with automatic enrollment, because it's very easy to figure out that you weren't taking money out on time. Now then.
So the employer costs of a 401k plan,
Now
Christopher.
then, most employers are writing checks for these amounts. There's the compliance administrative fee. All right, we do have most of our clients are actually writing us a check of some sort. All right, there are matching and employer contributions. Those aren't required, but they very often go into the plan. That is a cost of the employer. The fiduciary liability and responsibilities is a bit of a cost to the employer. They have to make sure that those things are being taken care of by some manner. And of course, most employers have at least some staff time taken up to help administer the 401k plan. Now then, what they get in return is substantial.
So there's tax advantages for offering a 401k plan,
Right.
and straight up making contributions is an amazing thing for an employer.
Right. The employee contributions have no impact on the employer's taxes, but obviously employer contributions are a deduction. All right. This doesn't take into account, and we're not even talking about all the new tax credits from Secure 2.0, different video about how most, if not all, of the compliance costs can be paid in the first 3 years. It also is a great thing for what for employees, Catherine?
Employee retention and recruitment.
Absolutely. Okay. We're talking to a lot of employers. They need to offer it as a minimum benefit because they need to up their benefit package to attract good talent. All right.
And to keep it.
And to keep it. And of course, last but not least, it helps to fund the employer's own retirement, okay? Sometimes that's the only money they're taking off the
Employers
table.
need to retire too.
We do. Yeah, I guess we do. Yes,
the theory.
definitely. That's the theory. All right. Now then, there can be hidden fees where this does not mean there's always hidden fees, but there can be hidden fees. Where's your money going? And again, none of this should be hidden. So, Catherine, what are some of the fees that can be taken from a 401k plan?
So administrative fees and charged for plan maintenance and compliance, and it can be the compliance part. It can be at the record keeper. There's some that's part of that fee, right?
Right. And the administrative fees, that can be the compliance side. Other fees that could be charged for maintaining the plan, and some of those can be taken from the plan. If they are, the plan sponsor should know what percentage or dollar amount that they are. All right. What's another one? This is almost always taken out.
So investment fees. So they're often embedded in the fund expense ratios.
Right. Now then, there's something called revenue sharing. We're talking here about the actual real revenue sharing, okay? TPAs don't get revenue sharing. Record keepers do. What's revenue sharing? That's a small percentage that the fund company gives back to the custodian and or the record keeper and or the financial advisor, okay? It's important that the plan sponsor understand if there is any actual revenue sharing. All right. What TPAs receive is very often euphemistically referred to as revenue sharing, but it's not. It's a basis points based on the assets in a plan, not based on the actual investments made available. It's more correctly platform provided compensation, and nobody likes to say that. They want to use the revenue sharing phrase. Our service agreements do not say revenue sharing, they say platform provided compensation. Now then, also another thing that people need to make sure they are seeing and understanding is there's a financial professional involved. How much are they paying that person? Obviously what they charge is very important. We very often come across prospects with takeover plans where they have no idea what they're paying their financial professional, and worse yet, they have no idea who it is because they haven't seen them since the Eisenhower administration.
So don't pay for no service.
And that's actually a fiduciary violation because you're having your participants pay for something and you're not receiving any services. All right. So make sure you know what's going on there. Now then, one way you can help spot and minimize your hidden fees is understand your 401k fee disclosure statement. Finally, why transparency matters and what you can do.
So employers, how to ensure your 401k plan is cost effective.
Regular fee benchmarking and provider reviews.
Yep.
Right. Make sure your costs per participant are going down as the plan's assets go up, hopefully. Do review your 408b2. That's at the employer level. Okay. Yep. And 404a5. You generally only get a 408b2 once or when the fees change. And the 404a5 is supposed to be provided to the participants on an annual basis. That is to explain what their fees are. Make sure you know who is doing what. If they're being paid out of the plan, it is the plan sponsors and the capital P, capital A plan administrators and the trustees' job to understand what is coming out of the plan and who it's going to and what services are being provided for that money. If absolutely everything is being paid for by the employer, it's possible, okay, then it doesn't really matter, all right, because the employer is paying for it. Now then, finally, do ensure that compliance and fiduciary responsibilities are being met. You're paying for something, make sure you're getting a return on it. Now then, Katherine.
So, for employees, how to take control of your retirement savings. So, review your plan's fee disclosures, that's the 404A5.
404A5. That's the 404A5, yes.
It is.
Sorry.
One caveat is the law doesn't require the lowest cost. It's more that you get what you're paying for.
Right. Make sure. Yeah. So what?
It's an appropriate cost for what you're getting.
So if your plan only has actively managed funds, that's not illegal. Okay. If your plan only offers index funds, the lowest cost ones, it may not necessarily be legal. Okay. So you need to make sure that you're getting what you're paying for with the fees, understand what the fees are and what the potential rates of return are for those fees.
But then you can look at your 404A5 notice or ask in general at the meetings that you have about your plan about low-cost investment options.
Make sure you understand what they are. Okay. And then, of course, always understand how the employer contributions work. And we're talking about matching contributions here. Okay. Remember, it is not mandatory. It is not mandatory that your employer make a matching contribution every pay period. It is perfectly legal, totally okay to make it one lump all at once at sometime in the following plan year. That there's a lot of really very valid reasons for why that happens. Okay. And then finally, Katherine.
So if you want to see how much you can save when starting a new 401k plan, go to our tax credit calculator using the link in the description.
Thank you so much for watching. You know the assignment, except don't forget to keep those cards and letters coming.
So like, share,
Yeah, all that other
all
stuff.
of those things. Toodaloo.